Hello fellow investor, in this video I'm going to explain how the strategy of selling cash secure put works, and I will also show it how to sell cash secure puts in my Interactive Broker account. As usual, everything is in the timestamps. Let's start it. To explain how things work, we need first to choose one stock that we want to use it. In this case, let's choose Starbucks, which is exactly the same stock I used in my example on covered call. Link into the description if you want more information about covered call. So let's imagine that right now the price of Starbucks is $100. So if you want to buy Starbucks, you need to pay $100 a share. And this is why cash secure put enter in the game. Selling puts is the goal for you to try to buy Starbucks not at 100 but a lower price. Let's see how it will work. As any option trading strategy, the only thing that matters for us is the strike price and expire date. So we need to decide what is our strike price. In this case, we decided 95. So let's say it's a 5% out of the money. Out of the money because when you sell puts, the price which is lower than the actual price is out of the money. While when you sell covered call, the price which is higher than the current price is out of the money. I know, a little bit complicated, but let's follow me. Let's continue to the selling cash secure puts. So 95, our goal is to try to buy Starbucks for 95 and not for 100. This is the goal of the strategy. And of course, we need to decide an expire date of our option. And let's say, for example, 1st of September, which is in 4 months from now. We go on our stockbroker, we try to sell these cash secure puts. And let's say that our premium, the premium we get, which are money that enter directly in our bank account, and we can use it how much we want. This is our gain for the moment, is $1. I will show later when I enter in my Interactive Broker account, you can see exactly how this premium came from, because there is all the process. So, but let's say that we arrived to this stage. So we sold one cash secure put with expired date of 1st of September at the strike price of 95 and we got $1 in premium. So let's see what happened. For example, in case we are in front of a bear market. Bear market means the stock price of Starbucks from now until 1st of September, which is our expiry date, will go lower. And will go lower even of our strike price. So for example, will go to 90. Means that on 1st September, our option will be exercised. So we are forced to buy 100 share of Starbucks at the price of 95, which is lower than 100 that we had before. So comparing to now that if we want to buy to 100, we will find ourselves able to buy at 95. But we need also to understand that we will have this stock in portfolio, and right now the value of the stock is 90. So there is like a double side of the same strategy. From one side you have a gain because you bought a stock that was priced at 100, you were able at the end to buy to 95, which is the whole goal of the strategy. But from the other side, the stock can be priced even lower, so you can find yourself in your portfolio to have now 100 share of Starbucks with actual price 90, but with your average cost of 95, which is not ideal. But cash secure put are strategy in general used by people that want to keep the stock for very long time. So it's just a way to buy at a cheaper price, and doesn't matter if right now the price can be even lower, but you are bullish on the stock on the long run. But let's see what happens in the other side if we are in a bull market. So let's say this is exactly the same situation we found ourselves before. We have one cash secure put. We sold one cash secure put, strike price 95, expire date 1st of September. We get $1 premium. And let's see, we are in a bull market. So it means 1st of September, price of Starbucks, which will be higher than 100 and also, of course, higher of 95. In this case, nothing will happen. Your option will expire worthless. It means you are not forced to buy any stock. You keep your premium. But of course, you don't own Starbucks, so you can go back and think, it was better if I bought Starbucks at 100. Yeah, in this case, yes, of course. But from the other side, in the bear market, it will be better to sell the cash secure put in order you can buy Starbucks at 95 and not at 100. Of course, like all option strategy, things can work in your direction or in the opposite direction, so there is a risk and reward of any strategy. Anyway, let's now switch to Interactive Broker, because I will show exactly the passage step by step how to sell the cash secure put both in the trader workstation and in the web version of Interactive Broker. Let's take a look at my Interactive Broker workstation. This is my account, this is my dividend portfolio. As you can see right here, I have a couple of covered call open that expire exactly today, but let's not talk about that. I will try now to show how to sell a cash secure put in the trader workstation, and after I will show also how to sell in the web version of Interactive Broker, which is exactly the same. So let's do exactly what I did in my example before. Let's search for Starbucks, which is right here. Okay, here is the Starbucks stock. This is my position. It's not, of course, important that I have a position because I'm going to sell a cash secure put, so it's not a covered call. I don't need to be covered by the position, but I need to be covered by cash. At the moment I have more than $13,000 cash, so it will be covered, you will see right now. So this is the price of Starbucks right here. We can see the full year price. This is my entry level, just if you are curious about. Right now it's trading around 106. And let's open the option chain. This is the option chain. This is the option that expired today, 0 days as you can see here because it expired today. Of course, let's go on 16th of June, which is 28 days from now, so let's say 1 month. And so here we have the calls on the left, the puts on the right. The one in blue are the one in the money, the one in red are the one out of the money. And we need to sell out of the money, I mean, exactly like was in the example. Unfortunately, the example I did, the price of Starbucks was 100 and I was selling to 95, so let's say 5% lower than the actual price. But right now the actual price is 106, so I will sell the one with strike price 100, let's say around 5%, a little bit more than 5% out of the money. You see, this is the premium that go between 0.58 to 0.60. We click right here and okay, as you can see, cash put 100, sell at the, let's say, bid price, because I really want to get to make the trade right now. Quantity 1, because I want to sell the puts only 100 shares, and let's submit. See right here it gives me some information about the actual price, and let's do just a recap. Starbucks June 16, 2023, put with the strike price of 100. So the amount of the premium I will get is $58, so it's 0.58 multiplied for 100 share, because I'm selling for 100 share, it's 58. With the commission that goes, let's say, between half and $1.5, something like that, the approximately net premium I will get is $58. As you can see, my account equity at the moment is a little bit more than $13,000. After the trade, I will have $56 more, but I will have a margin. I mean, this is a cash account, it's not a margin account. It means in the moment I sell a cash secure put for 100 share of Starbucks with the strike price of 100, means I need to have at least $10,000, because 100 multiplied 100 is $10,000. It means that this money will be in some way blocked in my account, and I cannot use this money, because otherwise, in case I get assigned, I will not be able to satisfy the request and I will not be forced to buy the stock with the stock price of 100. So anyway, let's move on. Let's transmit the order, and was already sold, of course, because I put a quite low price. My limit was 58 and I sold for 59, so I get a little bit more premium, $1 more. And you can see right here now, these are the two covered call I had before, and now I have the Starbucks put, which is the one right here. In 28 days, we will see if the stock price will go higher than 100. I will not get assigned, and I will just keep my money, and I will get my $10,000 will be ready to be spent in something else. If for some reason the price of Starbucks will fall down in the next 28 days, it will go under 100, I will get assigned. This means I will buy 100 share of Starbucks at the price of 100. So let's now take a look at the web version of Interactive Broker, which works exactly the same but can be interesting to see. This is my dashboard of my portfolio. Let's search for Starbucks, exactly how I did in the trader workstation. This is the stock, and I want to see the option chain directly. So let's jump to the option chain. It's of course a little bit different comparing to a trader workstation, but if we look deeper at the end, the information are exactly the same. So these, as you see right here, are all the expired date of the option. We go in the one of 16th of June, which is the one we saw before, and this is the one, the strike price of 100, and you see it's trading again to 0.59 at the moment, 0.61 between the bid and the ask. This is the spread between them. It doesn't change much, but the market is open, so it can change quite fast in case the stock price will have some big movement. So we select this one, June 16, 2023, 100 put. We can go lower. It forecasts the maximum return that we have is 59. The maximum loss we can have is almost $10,000. It means if for some reason the stock of Starbucks will go to zero, I will be forced to buy at $10,000, so I will lose 9,941, which is 10,000 minus the 59 premium I got. So let's go to the ordering ticket. You see right here there are all the information. Unfortunately, of course, I cannot do it because I don't have enough money, because $10,000 already be blocked for the previous put I sold in the trader workstation. So now I have free only, let's say, $3,300, and it means I cannot sell it. But otherwise, it's exactly the same system. You just push here submission, sell order, and you will sell the cash secure put. I hope the process is clear, and from this video you understood the theory behind cash secured put. I personally don't use that much. I don't sell many of them. I'm much more selling covered call. If you want more detail about that, you can check the video right here where I explain all the passage. But anyway, it can be a good thing to do, especially inside what is called the wheel strategy. I will probably make another video about that. Let me know in the comment what you think about this video. If you have any question, I will always try to reply. Subscribe to the channel, and see you to the next video.